TWR is your one-stop shop. Hey, what is up, team? Chuck with Traders War Room, and I'm back at you with another video. This is your Sunday Motivator, and I got a fantastic video for you. But what I need you to do right now is I need you to hit that like, that share, and that subscribe button, guys. And I need you guys to come along with me on the journey and check the description tab out. Tons of tools and tidbits to make you a more successful trader right there in the description, guys. All you got to do is click the link and go learn about Traders War Room and all the stuff that we have to offer. Now, without further ado, let's go ahead and get into it. And as always, if you're ready, follow me and let's go to war together, team. Traders War Room, baby. Let's get it. How's TWR doing thus far? Going over some of the trades that we did over this past week. Look at BA right here. We entered BA on 130, exited at 205. Great trade, decent money, and riding momentum. Apple was a fantastic trade as well. We still got some runners on this. Check out the 160 call we did. We entered this at 55. We exited most position at 115. Left a few runners just to catch to see if we get a little bit of a push over the weekend from some of this bank volatility and some of this basically run up into the FOMC on Wednesday. Docu was a fantastic trade. We entered this one, $55 call, went in at 173, came out at 325. Definitely could have got some more out of this, but not greedy, making our money and taking it. And Meta, man, we went in at Meta on this 210 call. We went ahead and got in at 149. We took main position out at 290, left some runners. Again, kind of like Apple. If the market's trending, we'll be able to exit out, come tomorrow at that bell for some decent money. And guys, these are just a few of the alerts, man. We got so many alerts that were pushed out. We just can't possibly put them all into a video when we want to talk about some other stuff. And these are just my alerts. I have over 35 other analysts and algo bots pushing that fire every day. $100 to $1,000 per day is possible when you're a TWR market warrior. So quit wasting money. That's not making money. Join TWR. The links are in the description. What's hot and what's not. Here's how your markets closed on Friday. It was a blood fest and basically stemming a lot from that banking volatility and just uncertainty in the marketplace. So we're looking for a little bit of a push, at least moving into the FOMC on Wednesday. And I think that with some of these bank bailout information that we heard over the weekend, we'll probably get a nice little bit of a green day coming into this beginning week. The futures are pushing into the green, especially after we got some news of a bailout for Credit Suisse or Credit Suisse. And so we'll see how this plays out in pre-market tomorrow and when that bell rings at Wall Street at 9:30. Here was your sector performance, and as you could see, technology was the least lagging, and financials just absolutely took a beating. Now, I do want to note we have some new additions, and I think they go into effect this week or next week, where some of the stocks that were previously in some of the other sectors are switching around. Example would be PayPal is now moving out of the technology sector and moving into the financial sector, and Walmart is moving out of consumer discretionary and moving into consumer staples. So we'll see how the indexes play around with some of these shuffling of some of these bigger names that we're hearing about that happened over the weekend. Here's your flow, looking pretty bullish. So we got a lot of people thinking that we're going to see a pretty decent run in the market, and a lot of hopes and dreams are set on the Fed pushing for a quarter rate hike. And I promise you, if we get anything other than a quarter rate hike and it pushes even talking 50 or something like that, the market is just going to dump. But we get any slight sign of some dovish news, the market's going to jump hard, and it's going to just absolutely just roar this week. Dark pool, of course, SPY, the Q is in there. We got Qualcomm pushing into the dark pool and ABBV. So definitely paying attention to some of these new tickers that are seeing some, flow through the dark pool sector and paying attention to. But, of course, the big boy right there, SPY, with the Q falling in second. Here's some of your top gainers from last week. Looking at the stocks right here, what we like about the top gainers is that hopefully we can catch some great entries on pullbacks for continuation to the upside. Some of your top losers, and kind of like the top gainers, what we like to look for on the top losers is we like to see potentially bounce from knee-jerk reactions from the bottom and trying to capture back some of the losses that were occurred. So basically we're looking at some things that say dumps 10%. Well, if it's a solid stock and the fundamentals are sitting there and you're like, I wonder why this dumped, could have just been just overall downtrending pressure, and we could be seeing a potential reversal with a bounce to make up, say, 5% of that 10% that it knee-jerked down on. Here's your most active stocks. These are the ones that were moving and shaking all throughout last week. And here's your most volatile stocks. Now, understand that those banking names, okay, they're going to stay elevated and stay volatile while we're still dealing with this financial crisis, okay? So expect some volatility still, and specifically within those speculative trades that have monies associated with those banking firms and things of that nature. So definitely we'll pay attention, but volatility is a great time to make some dramatic money riding trends, both bullish and bearish. Unusual stock volume. And what we like about unusual volume in the stocks is this might give us an indicator of some bullish momentum or even bearish momentum on the actual stock itself. That can specifically help us deciding whether to go long or go short, or if we're looking for day trades or swing trades. And for you derivative people out there that like them options, I love me some options too. Here's our unusual options. And similar to like the unusual volume with the stocks, we look for these unusual option volume because we're wondering what the big money is doing, and it can give us an indication of the overall sentiment on some of these tickers. But we don't want to be fooled, okay? So we definitely look for our own entry and exit points off of momentum, because sometimes these will be kind of scapegoats. They'll be doing these unusual volume on options as they're hedging an underlying stock or an equity position. So you have to pay attention. You can't just jump in blindly. You got to make sure that you're set up 3 reasons why to push the buy, and make sure you're going with the flow and following the trend. Here's your hot news stories. Basically, the U.S. sees deposits stabilizing as some regional banks reel. And so it's talking about a U.S. official said on Sunday that the deposit outflows that left many regional banks reeling in the wake of Silicon Valley Bank failure had slowed and in some cases reversed as investors tried to ascertain whether the crisis was contained or not. So we'll definitely play this by ear. I still see that we have some issues in the financial sector. Anytime you got to have, big boy come in there and do some bailouts, that's not always a good picture on a particular index or industry. Interesting over here talking about Credit Suisse. Hong Kong Monetary Authority says the Credit Suisse business and city open as usual, which is okay. We want to listen to these terms: business as usual, open as usual. Depositors will have access to their monies if they need it, so on and so forth. So at least over in Hong Kong, they're talking about that the Securities and Futures Commission said on Monday that Credit Suisse operation in the financial hub would be open for deposits. And that's big news because that was one of the big banks that we were looking at to see how it was going to unfold. And again, no surprise here. Of course, financials are in the news and it's big news. And this is talking about what we were just talking about with the Credit Suisse. So basically, analysis: UBS swallows doomed Credit Suisse casting shadow over Switzerland. So UBS Group emerged as Switzerland's one and only global bank with a state-backed rescue of its smaller peer Credit Suisse, a risky bet that makes the Swiss economy more dependent on a single lender. And so we'll have to pay attention to this, because while the bailout happens and it's adding some at least short-term relief, it's also kind of dangerous, because if they continue to get the fundamentals just going nuts and crazy and continue to head towards default, then that's going to put a little bit of extra pressure on the overall government itself. So paying attention to that, and definitely watching banks this week, because it's going to be nuts. Stocks I like for trades. So here's your upcoming earnings for this week. And we got some names on here that we're interested in looking at. We got the Nike over there. We got the Air Ray, Petco, Wolf. We like some of these names, Chewy, so on and so forth. So we're going to pay attention to some of these earnings because some of these will give us a nice dramatic movement that we need and hopefully be able to make some money following the trend, whether it be bullish or bearish. And for you derivative guys out there that love them options, we pay attention to the volatility earnings that are associated with this particular week. And what we like about this is what is the normal volatility range for particular stocks? And then what is the expected volatility range for a stock? And so I like to really focus on stocks that are between 10 and 15% movement, and specifically if the options market hasn't already priced in the volatility. So that's definitely interesting. For example, if you look at FRC, right, that's First Republic Bank, you look at a $5 push from where its underlining is currently, you're looking at extremely juiced premium because volatility is expected and the volatility is just juiced, right? But we look at a trade on, say, Nike or some of these other ones that haven't been hit with the financial crisis, and now it's a little bit more of an attainable type of trade where you get a better risk for your reward and you're not out a whole big chunk of change, okay, with still the potential of having a dramatic push between 10 and 15%. And here's your top 15 trending tickers. And what we like about this is we like to utilize this as an idea maker. This is thought-provoking content here. Why are these on so many people's watch lists? Are they expecting a push? Are they not expecting? So we, can break some of these down and pay attention to these and see if these are worth our risk versus reward, and if they give us great entry and exit points. Remember, we're just looking and trying to utilize items to kind of narrow down the field on things that are other people are looking, so that has volume, and things that are moving and shaking so we can make money off them while we're trading. Investing, completely different thing, right? Investing, you want to buy into the stock and start a position, go long, and the idea is that you're going to make money over the long haul, which historically shows that if you hold something over 3 to 5 years, you're eventually going to make money on it as long as it's not a failing business. However, trading, we're looking for that short-term money flipping. Basically, we want to get in at $5 and we want to be able to flip it to $10. And in order to do that, we have to find a trend and we have to ride momentum. All right, so let's go ahead and talk about SPY. This is all going to be dependent upon the sentiment in the overall market. So we're looking for calls above 392.80. We're looking for puts below 389. Depending on the sentiment, this is going to go either way. All right, and it's going to go dramatically. Okay, if the sentiment to the bear side of the house continues, we'll see a push down lower. However, I do think that at least we got a catalyst with the FOMC, and so I think that we can potentially see a raise higher. FOMC could definitely squash a move higher, but I think that we at least get a run into earnings, or the minutes of the FOMC, and also based off of this banking news that highlighted over the weekend where we're starting to get some bailouts and at least a little bit of relief. So we'll pay attention to this, but I think it moves up first to test some previously recent highs, and then we go lower. Nike, I like this for a push to the upside. I think that it's quite possible we could break out and see some decent push. China reopening has everyone buzzing about Nike, and they've actually done really well here recently since hitting their lowers earlier in the year. So I do like this for a push to the upside. We're looking for calls anything above that 120, 125, and if we're starting to push to that 119.75, we'll start looking for the short side of the house. Wolf, I like this for a push to the upside. I think that we could get a move lower. However, I do think that they're going to do rather good on earnings. And, because one of the things that's still coming up is people are starting to still spend money on their pets and they're starting to do things with their pets. So I do think we see a potential for a move higher on the earnings news, and moving into earnings, I think that they'll push a little high. I do think that we got a cascading effect from a downward trend, and I think we'll probably start to find that support and bounce from there. And it could very well push to above $10, going on $11 if we get some fantastic earnings. Chewy, very similar to Wolf. I like this one because we got an outside bar. So all we do with outside bars is we put our triggers on the edges of those outside bars. So we're looking at anything bullish above 39.50 and anything bearish below 37.98, but you call that $38 or even $37.75 to be a little more conservative. And Express, for you penny stock people, you like these penny stocks. Express, we're looking at anything above 90 cents, potentially a push to go back and see if we can attack the dollar. But anything below that 83 cents, we're probably looking for another leg to the downside. But this one will probably get some volume and probably push to the upside. It's fairly cheap, so I could see a lot of bullish sentiment going in there. But just be ready to pull your profits and take money because, when things are cheap like this, it can run very hard, very quick, and then people are just going to take their money out at 25%, 50%, or even 100% up. And finally, last one I got for you is DRI. This is those restaurants that, we have, Olive Gardens and Applebee's and stuff like that are all invested inside this DRI. So I do like this for a push higher. It could potentially be looking to break out above this 150, but we go ahead and put the trigger there. We're looking at 150.75 for anything to the bull side, and we're looking at anything 148.25 for continuation to the downside. So I do like this trade going into this week. I think this will do fairly well. People are eating. Every time I've been to one of those bigger restaurants, people have been eating, they've been packed, people are spending money, and they're enjoying going out and dining like they used to back before COVID hit. That's it, team. Don't forget, make the market bend the knee in 2023. Join TWR and bow to no one. The link is in the description or on the website at traderswarroom.com. Let's go to war.